Yeah, that's REITs. It stands for Real Estate Investment Trust. And these are great products. They're a lot like a mutual fund. But one of the differences is that whereas a normal mutual fund has stocks underneath them that can be bought and sold very quickly, real estate investment trusts have real estate such as office buildings, retail, apartment buildings, industrial sites as their holdings, and they can't get in and out of them quickly. So I talked earlier about the idea that REITs are have some good way to access real estate. Well, they're going to go up and down with the stock market, but as whoever asked this question knows, they also tend to be kind of sensitive to interest rates. And if interest rates soar, then real estate investment trusts are going to probably drop substantially in value. Now, first of all, I would point out that I'm not convinced that interest rates are going to soar. Amongst most people, I would say that I'm actually slightly below, I have slightly lower interest rate expectations than most people. I think that, we all fear that inflation's going to come storming back, the Fed's going to tighten, and interest rates are going to soar back up to their more normal ranges of 4, 5, 6, 7%. And that's very possible, and that's why we want to be careful. But I actually quite strongly believe they're not going to go up that much. They could, but I don't think they're going to go up that much. And the reason is I think there's so much money that people are so anxious to get out of the stock market. The Dow Jones is above 18,000, and there's a lot of people there that I think that are saying, oh, if I could just take my money and put it in a safe place and get a decent return. Well, you can't do it. If you take your money and put it in money market mutual funds or short-term CDs, you're actually going to earn 1% or so. You're going to pay taxes on that 1%, and then the money's going to disappear at a rate of 2% due to inflation. So I think there's a lot of cash, there's a lot of investors on the sideline in stocks that are very anxious to try to get some attractive bond yields. And I think that as those bond yields begin to pick up because of possible inflation or Fed tightening, I think you're going to see these people come in and buy those bonds, driving the interest rates back down. So I don't think interest rates on average are going to go up that much. So I think that REITs are a good place to put your money. Why? Well, first of all, I'm not bearish about either bonds or stocks. I'm just moderated in my views. But I think they offer diversification, because if equity markets go down, REITs will go down, but they probably won't go down as much as the stock market. And if bonds go down, then REITs will go down, but they probably won't go down as much as the bond market. They help to diversify you. It gives you exposure to both of those, and it has underlying properties with reliable rents and revenues that I think will do well in the worst of economic times compared to the other asset classes. That's the reason to be in REITs, even though obviously we expect interest rates are more likely to go up than they are to go down.